Some breaking news on Google this morning. Let's get to Deirdre Bosa. Morning, Dee.
Hey, good morning, Carl. Google shares, they are down more than 2%. This on this court ruling that a judge has found that Google holds illegal monopolies in online advertising technology. Now, this could allow prosecutors to argue for a breakup of Google's advertising products. Google is now facing the possibility of 2 different U.S. courts ordering it to sell assets or change its business practices. A reminder that next week, the remedy trial gets underway where the DOJ is pushing for Google to break up or sell its Chrome browser. Now, on top of U.S. cases, of course, there's European antitrust and a number of other lawsuits around the world, all adding to Google's regulatory pressures. And guys, I will note, just as Google's momentum in AI is picking up, it's scoring a lot of wins here. This opens up a new front, one that has existed but was a little bit quiet for a little bit. It is going to be in full focus next week, especially as that DOJ remedy trial gets underway. But for now, this is the ad tech trial hitting Google shares by about 2%.
Yeah, you can forgive people for sort of getting confused about the various trials, Dee. The remedy part, obviously, they already were found guilty, so to speak, or at least of being a monopoly, I guess, now that remedy trial begins. That's going to take some time as well. It's not as though that's going to resolve the matter in a quick fashion, is it?
It's going to take time. We're going to see appeals. And so this opening of another front in the ad tech trials, this is going to take time as well. I mean, there was some hope coming into a new administration that perhaps the new head of the DOJ and, a new administration would maybe come back and look for less severe remedies. That has not been the case. I mean, the worst case scenario, again, is that Google would have to break off Chrome, and that scenario, in that case, the DOJ case, now the facing of breaking up its advertising technology. I mean, it just amounts to really an avalanche of regulatory pressure that could hurt Google at a time when it's trying to, catch up and lead the way on AI.
Yeah, and of course, we've been hearing from Eamon Javers daily on the Meta trial as that continues in terms of their purchase of Instagram and WhatsApp and whether those should be forced to be. They were acting as a monopolist. And then Amazon is still out there as well. I mean, none of these things have come to an end under the Trump administration.
It doesn't look that way at all. And also, it's interesting, given how differently, tech has treated the Trump administration. Remember that many of the mega cap CEOs, they were at the inauguration. These companies made donations to the inauguration fund. They've gone to Mar-a-Lago. That doesn't seem to be paying off whatsoever yet, at least when it comes to these regulatory issues. And you could argue, too, on the tariff front, potentially.
Well, that goes against Senator Warren's point, which is all you have to do is go there and give him a donation and make a deal. I mean, this goes against it, the fact that they're still being targeted.
Yeah, if only it was that simple.
We tried to raise the NVIDIA example. She didn't really bite at that one. Interesting, Dee. So they got the regulatory pressure, macro concerns getting introduced, ad spend. We saw Temu Shein today. And they're being asked to keep up with the Joneses on AI CapEx.
The only bright spot I will mention, Carl, is that they do seem to be finding their footing in AI. You've got the I.O. conference coming up in a few months. That will be a big sort of indicator. But that is maybe one bright spot. But there's a lot of pressure for the mega caps as a whole.
Yeah. Speaking of which, Dee, thank you. Deirdre Bosa.